Tesla is no longer an EV company, and if you're still valuing it that way, you're already behind. In today's video, I'm going to break down 5 critical shifts happening inside Tesla right now, but more importantly, what these changes actually mean for you as an investor and as an owner. Because once you understand this, your entire perspective on Tesla changes. This is not about news. This is about how to interpret what's really happening beneath the surface. Let's start with the big picture. What we're seeing right now is not a product evolution. It's a business model transformation. Most of the market is still looking at Tesla as a car company, revenue from vehicles, delivery numbers, margins. But Tesla itself is already moving beyond that. The real shift is this. Tesla is becoming an AI-driven infrastructure platform. And if you miss that shift, you will consistently misread the stock. Now, the first signal of this transformation is the supercharger strategy. Tesla recently introduced a foldable V4 supercharger design. At first glance, it looks like a minor upgrade, but the numbers tell a completely different story. Deployment speed is nearly doubled. Costs are reduced by more than 20%. That is not an incremental improvement. That is a strategic pivot. Until now, the charging industry has been competing on speed. Who can charge faster? Tesla is no longer playing that game. They are shifting toward density, toward network dominance, and this matters. For owners, this means more charging locations, less waiting, and more freedom to drive anywhere. But for investors, this is much bigger. This is infrastructure control. And historically, the companies that control infrastructure win long term. Think about AWS. Think about railroads. Think about telecom. My view is this. Tesla is quietly building the backbone of electric mobility. And once that network reaches a certain scale, it becomes incredibly hard to compete with. Now, let's talk about the second shift, Robotaxi. This is the defining variable for Tesla's future, not one of many, the variable. Even financial institutions are already signaling this. 2026 is the key year, and the reason is simple. If Robotaxi works, Tesla becomes a platform company, not a company that sells cars, but a company that monetizes transportation itself. That is a completely different business model, but if it fails, the entire AI narrative weakens. So what we're looking at right now is an asymmetric setup, massive upside, but also real risk. This is no longer a linear growth story. This is a binary outcome layered on top of a strong base business. And as an investor, you need to recognize that, because Tesla today is essentially an option on autonomy. The third shift is about product strategy, specifically what Tesla is not doing. Elon Musk recently hinted at a new family vehicle, not a minivan, but something much cooler. Now, that might sound like marketing, but this is actually very important because Tesla is deliberately choosing not to enter the minivan market. Even though there is clear demand, a traditional automaker would go after that demand. That's how the industry works. But Tesla is no longer demand-driven. They are strategy-driven. They are not asking what sells. They are asking what fits the system we are building. And that's a big difference. We are likely looking at a new 3-row vehicle that could replace the Model X over time. And from an owner perspective, this matters. It could become the next upgrade path. From an investor perspective, it also matters because it could support volume recovery without compromising Tesla's long-term strategy. The fourth shift is more technical, but just as important. Steer-by-wire. Tesla has filed a new patent that significantly expands steering range beyond traditional limitations. Now, this is not just about improving driving comfort. This is about redefining the entire driving experience. One of the main issues with the yoke steering has been low speed usability. Tesla is solving that. But here's the deeper layer. This technology is highly compatible with full self-driving, which means Tesla is not just developing autonomy. They are redesigning the human interface alongside it, and that's critical because in a fully autonomous future, the way humans interact with the vehicle changes. Driving becomes optional, and the interface needs to reflect that. What Tesla is doing here is rebuilding the in-car experience from the ground up. Now, the fifth shift, and this might be the most important one. Right now, Tesla is in a state of split perception. On one side, EV sales are slowing. Brand sentiment is mixed in some regions. On the other side, expectations around AI and Robotaxi are extremely high. So what we have is a gap between reality and expectation. And this gap is driving volatility because Tesla is no longer being valued based on what it is today. It's being valued based on what it could become. And that creates divergence. Bullish investors see this as the beginning of something massive. Bearish investors see this as expectations getting ahead of reality. Both perspectives exist at the same time, and Tesla is sitting right at that intersection. So let's bring this all together. Tesla is no longer just building cars. They are expanding charging infrastructure. They are developing AI-driven autonomy, and they are using vehicles as the entry point into that ecosystem. In other words, Tesla is becoming a real-world AI infrastructure company. And if you don't analyze Tesla from that perspective, you will consistently misunderstand what's happening. Looking forward, the next few years are going to be critical. Robotaxi rollout, infrastructure expansion, AI monetization. These are the variables that will define Tesla's trajectory. In a bull case, Tesla scales into a global platform. In a bear case, the narrative compresses, but either way, we are entering a decisive phase. Now, let's quickly look at the stock. Today, Tesla is trading around $375 down on the day, but all three major US indices are also down. So this looks more like macro pressure than Tesla-specific weakness. And this is important because short-term price movements don't always reflect long-term value. So here's how I think about it. Tesla is volatile because it is priced on the future. And the real question is not what Tesla is today. It's what Tesla becomes over the next decade. And if you are a long-term investor, this is exactly the phase where conviction matters most. On this channel, I don't just cover the headlines. I break down what they actually mean. So if you want to stay ahead of where Tesla is going, not just where it is, make sure you check out the next video. Thanks for watching. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.